And these are the top 5 stocks that my community has been talking about. The IGV, of course, the software ETF, Oracle, which has earnings this week. We're going to talk about Oracle, ONDS, Avav, which are both drone companies. We have SoFi that wasn't included in the S&P 500, NVIDIA always being talked about. Arcat also, another small military company, and Google and TGT, which is Target. So before we analyze these stocks that my community in Hebrew talked about, let's dive in to the top 5 things that I'm looking for next week. One is the war in Iran, or the operations in Iran. You call it as you want or as you wish. Will it continue during the week, or will the US declare victory around Tuesday, which might come after maybe sinking all of Iran's navy, maybe Air Force and others, and of course to try to combat what's going on in the second or third thing that I'm looking at. So one, will the war continue during next week? The second thing, the Strait of Hormuz, are we going to see movement of vessels or not? What we do know is in the last few hours since I'm recording that, we are hearing that maybe traffic started to go through. Ships and freighters are turning off their transponders in order for the Iranians not to know that they're moving. Insurance has become very expensive, and that's why Strait of Hormuz is impacting. And what is it impacting? It's impacting Brent oil crude. As you can see, during Friday, Brent went up to 92.6. WTI crude went to $89. This is a almost 40% increase in 1 week. This is crazy. This will create inflation in a lot of products, not only oil. You can see it in the gas stations. You can see the price going up. This, of course, impacts a lot of things, and that's something that the US or Trump administration will not be able to keep on for a long time. And that's why the first thing that I'm looking for is the war, the operation going to end? Then we continue to the Vix, the volatility index, a safe haven, run for safety by a lot of investors that do not want to sell their stocks. An increase of 24% during Friday, almost got to 30. And why 30 is so important, and in general, why is the Vix so important? Especially because we have data that shows that the Vix, once it spikes, look at the forward returns. And if you don't see the numbers, just look at the color coding, and I'll read you the numbers. 4 weeks after an event like Friday, in average, the S&P 500 is up 1.5%. 3 months after a spike has happened on Friday, 5.6%. 6 months later, in average, 8.7%. And of course, a year later, 13.6%. So what we saw on Friday might be maybe a buy the dip opportunity, and this is a good opportunity. Before we continue, to remind everyone and to say hello. My name is Micha, and on this channel we talk about Micha Stocks, and on this channel we talk about stocks, we talk about investment, we talk about the market, but we do not provide financial advice. So everything and anything that you see here is by no means financial advice. You need to, of course, consult your financial advisor for any changes. The next thing that I'm looking for next week, Tuesday after the bell, Oracle is reporting. And why am I so interested in Oracle? Because their CDS spreads, their insurance on their credit is so high that insurers are believing that they might just not be able to withhold all their investments. And Adobe on Thursday, also interesting. The reason for that is because they got hammered so hard because of AI. Will they show that they're so strong that AI isn't impacting them? Or has the market sniffed out one of the casualties of AI? And last but not least, of course, we have CPI on Wednesday morning, 8:30, where we're going to see inflation. We won't probably see the impact of Iran operation or war yet because it's too early. This is the February CPI. But when you connect a very weak labor report on Friday with this CPI, it might give us clarity on what the Fed needs to do. Because if you've missed on Friday, we got a very, very, very bad print for the non-farm payrolls. You can see non-farm payrolls came in minus 92,000 when the estimation was to increase the jobs. This, of course, creates a lot of tension for the Fed. On one hand, labor is in trouble, so they need to lower rates. But on the other hand, they have inflation going up because of Straits of Hormuz. not a good recipe for the Fed. Let's look very quickly on the week that passed. All the averages ended on the red, with the Nasdaq ending relatively better than all the rest, 1.2% down. S&P down 2%, Dow Jones down 3%, and the Russell down 4%. Almost 1, 2, 3, 4, if you want to remember it by heart. The biggest winner this week, crude oil, up 35% for the week. This is WTI crude oil, not Brent. Brent is even higher, I think, for the week. Natural gas up 10% for the week. Silver up 9.6% for the week. But gold calming down right now, minus 2% for the week. When we look at the Magnificent Sevens and more, we see Oracle up 5% for the week, but be careful, they're reporting earnings this week. We have Microsoft up 4% for the week, and Broadcom, which reported very solid earnings, 3% for the week. On the flip side, Google, with a threat of a head and shoulders pattern, we're going to talk about it later in the show. Apple down 2%, and we have Tesla down 1.44%. And now, since you've probably noticed, the weekly summaries have changed to make them more interesting and not just covering the news that happened because it's already happened. Let's look at what are the stocks that the community has talked about, meaning they probably have traded during the week or invested during the week, and let's see where they're going. So these are the list of stocks. You saw that at the beginning of the show. We have the IGV, an ETF, which is heavily discussed during the week. And the reason for that is this is the software ETF. We tried to call the bottom. We never can call the bottom. I'm not even trying to say that we can, but we did notice a lot of volume going into that ETF, and that kind of told us that something is going to happen. And from the bottom of the ETF till the top, it went up 15%. Now, the question is, should you now chase it or should you run away from it? And again, I'm only analyzing it from a technical perspective. This is not any financial advice. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9 consecutive buying days. These are green candlesticks, which mean that from the beginning of the trading day till the end of the trading day, the ETF, the IGV, went up and not down. So the buyers stepped in. After such a stretch of green, we should be ready for some red days. Now, will they be 1 or 2? Just like here we had a stretch of red and then 2 green days and then we saw another red. I don't really know, but I don't think you should chase it here. I think you should wait for some kind of pullback. At least that's what I would do, and I would wait for a pullback to around $83 and then maybe increase the position. At least that's what I'm thinking about doing. The next thing is Oracle, and the big question is how the market is going to treat their earnings. Now, from a stock perspective, they broke out of their higher lows. As you can see, their highs are going lower, okay? They broke out. Now, on Friday, they ended with an indecisive candle, which means that they might correct. That's fine. They have earnings on Tuesday. Up until Tuesday, I don't care what's going to happen with the stock. The big question is, what is going to be the reaction to their earnings? Will the stock go up and try to break out of 170, which would be very bullish, or it will go down and break underneath 137? If it will, that would be very bearish. In between, it's nothing. It's just playing with yourself, playing ball with a wall or something like that. There's nothing to talk about. Then we have the small drone companies. One of them is Ondas, O-N-D-S. And you can see by these, the shapes of the candles that there are, the market usually starts the day with buyer's pressure, then it changes to seller's pressure almost every day during the week. So this is a very volatile stock. You need to know how to trade it in order to get in, get out very fast, because as you can see, it hadn't changed its pattern yet. They're at the same price they were February 4th, which is a month ago. But in the meantime, a lot of stop losses, or a lot of traders got stop lossed here with this stock. I want to touch at the end with Google. So the pattern that we see here, and of course, this is not set up in stone. This is a pattern that we try to identify so we can plan ahead. What does it mean, plan ahead? If what I'm going to show you will go the way I'm kind of explaining it, then you should be prepared for Google stock to go down to $240, $250 a share. Now, you might not care, or you might say, I'm not going to lose 20% on that stock or 10% or whatever the amount would be. I want to have the point where I check out, where I sell the stock. Again, depending on you if you're a trader or a long-term investor. What do we see from a chart perspective? We basically see a pattern, not a clear pattern, so I'm giving it kind of that remark or that disclaimer, which shows that the stock wasn't able to break out 328, then it corrected to 296, broke out, went all the way to 349, corrected again all the way to 296, which is a very important level for Google, then tried to go up, got rejected at 319, and again, we are at the same point. Now, this means that if Google breaks down and isn't able to kind of stay above, let's call it 290, just to make it easy. If it doesn't stay above 290, then Google has a problem. Then it means, and I'm putting aside Gemini and different products that you might be using, Nano Banana 2. It doesn't matter. At the end of the day, the market is saying there's a bit of a problem. If they break down and the pattern holds, it means, or the pattern stays, it means that it might correct all the way from 350 to 260. That's 350 to 260. Let's measure the descent to 290. Sorry, not 260. 290, that's about, let's call it $55. If you copy paste those $55, then, and you put it here underneath the breakout point, Google might go down all the way to 240. Now, again, I'm not from the future. I'm not trying to predict the future. I'm trying to give you those levels that you should be aware of if that happens. Now, on the flip side, what we did get is when Google was at 350, it was very far, look at it, at 350, it was very far from a 150-day moving average. It was what I call stretched from the moving average. Now, I just replayed it to the history. Now, look at it. It's a lot closer to the 150-day moving average. Sorry. So if it stays above the 150-day moving average, then all we got was a correction to the moving average, which is, by the way, very, very good, because the last time we bought it at 150-day moving average was at 174, and it went up all the way to 340, which is a 100% gain. So it's at a point where all eyes are on Google. And now, let the market decide. This was the weekly summary. I hope you enjoyed it. Don't forget to smash the like button and share it with your friends. You're not sharing this video enough, and that's why it's not getting enough views. And too bad, because I think I'm providing you a lot of value in this video, at least from my perspective. If you want more things to be added, write me in the comments below. Till next time, Micha Stocks saying bye-bye.